creative disruption. This concept that has now become the battle cry of organizations in the digital age was first introduced in 1992 by TBWA's chairman, Jean-Marie Dru. Creative disruption is aimed at exposing flaws in the current business model and highlighting areas where changes are needed. It involves a radical change in the marketplace brought about by the act of demolishing long-standing practices, challenging established norms, and experimenting with the untried and untested. Hello and welcome to ETCIO Leaders Live. I'm Sneha Jha, editor at ETCIO, and your host for the session. We're streaming live right now into LinkedIn, Facebook, Twitter, and YouTube. My guest today is a long-standing insurance industry veteran. He is Srinivasan Iyengar, COO of Reliance Nippon Life Insurance. In a career spanning 35 years, Mr. Iyengar has worked in IT leadership roles at organizations like Aegon Religare Life Insurance, ICICI Prudential Life Insurance, LIC, and Prudential Services Asia. He joined Reliance Nippon Life Insurance as the COO in 2013. And since then, he has been deeply invested in the digital transformation process of his organization. He owns non-sales functions, including technology, digitization, operations, claims, underwriting, risk, and data analytics for over 720 branches of the life insurer. He has seen the insurance industry from close quarters, and he knows quite well how to leverage technology to pole vault his organization into the digital age. He is a highly awarded, highly admired, and highly regarded business and technology leader in the BFSI industry. Mr. Iyengar, welcome to ETCIO Leaders Live. It's a privilege to have you as my guest today. Thank you for joining us.
Thank you, Sneha, and thank you to ETCIO also for inviting me for this session. It's indeed a pleasure to be connected again.
Thank you, sir. It's an honor to have you on the show. Mr. Iyengar, insurance at its core is about helping people in crisis, fulfilling their needs through the different stages and the milestones of their journey in life. It's about risk management and minimizing the risk exposure of its customers. So the intention is very noble, but in all honesty, the approach is a bit conservative. Insurance does not have the most inspiring reputation for transformation and bleeding edge innovation. But in today's day and age, this industry is at the cusp of large-scale creative disruption through digital. There's an opportunity to reimagine how it works. There's an opportunity to make it relevant to our generation and how we live. There is an opportunity to see this industry through fresh new eyes. So I thought I'd talk to you about how creative disruption is making new pathways in an old industry and how digital-led creative disruption ensures that insurance meets its fullness. So let's start off with a top-of-the-mind question for all of us as consumers. Woody Allen once famously, or rather infamously, said that there are worse things in life than death, and that is actually spending an evening with an insurance salesman. Now, customers often find insurance confounding. The product is in the form of a promise. It is complex, it is intangible, future-focused, and it is steeped in crisis-driven situations. So how do you see digital taking the element of complexity out of the insurance equation, and how does digital make insurance easy to understand, easy to buy, and easy to participate in?
Let me start with an interesting insight. I'm sharing this point because you started off by saying in 1992, there was this creative destruction as a terminology brought in. And as a person who is very steeped in a lot of mythological studies, if you look at our own Shiv Puranas, what it talks about is the third eye of Shiv is called as the eye of creative destruction. What it does is where everything has got a life cycle, and as it goes to its stage of maturity is when you demolish the whole thing and restart. restart of a new tomorrow and a restart of a new dawn. With that, let me just get on to the subject that what we are here for. Insurance, yes, some of these aren't true. Insurance traditionally has been probably looked in certain quarters in that way. However, I would like to say that insurance is not a complex or impossible to understand subject. It is like any other financial product. The key differentiator of insurance versus some other financial product is that it protects the future for unforeseen specified event, which is what sets it unique. The word unforeseen specified future event. The moment we get into these, a certain element of estimation, a certain element of hypothesis is uh, inevitable. So, for example, in a life insurance process, there are these stages like there is a need analysis on what an insurance cover is needed by an individual. What are his life goals that he would like to secure with insurance? Somebody may have a need for only a life cover. Someone may like to have life cover and also an element of savings. Someone may want to just provide for his old age in terms of his annuity and so on. What is his present age? So these are the factors that naturally requires a certain amount of uh, discussion, addressing the queries, a certain amount of back and forth before a sale is concluded, or let us say a customer ends in buying the policy. Traditionally, an insurance salesman would have done multiple rounds of discussion with the customer, presented to him various quotes, then work on what are those if then analysis, suggested options, and all of this then finally leads to a final sale. As you would see here, the number of back and forth is what takes the largest chunk of this whole process. And this
Correct.
is where exactly digital came in to do the creative destruction. What did it do? It ushered in two big transformation which helped in destroying the some of the way in which a particular process was done and replaced it with a faster, better, accurate set of tools and solutions to enable the whole purchase process more faster, more accurate, and more enjoyable, if I can use the word rather than just saying simplified.
Frictionless also and seamless.
Frictionless, indeed. Now, these two major transformation, what are they? First is assessment and arriving at a right solution much faster, and that too at the click of a button, and
So a
or
proper need
using
analysis bases the life stage requirement
yes.
of a consumer.
Yes, this indicate this whole thing of need analysis. What digital did is just using a set of variables or set of information that you feed in on real time basis, as the seller and the purchaser would have been discussing, or if the purchaser buys it directly from the company, as he enters this information, at a click of a button, it enables all of these if then solutions and options made available in a fraction of a second to the customer, and also helps in generating scenario. The second one is using these if then analysis, also being able to do predictive proposition about the product or the various add-on that can best be suited for the customer is what is projected. Now, these are the two key pillars, I would say, which digital transformation has done in creatively destroying what was otherwise a long process or a perceived complicated process, and replacing those manual interventions or lot of subjectivity in a more predictive and reliable manner, and most important being on near real time or real time basis.
Right, right. Thank you. So, sir, you've very beautifully illustrated how what are some of the areas where digital is creating a very strong impact, and it is sort of rejiggering the way things were perceived in the traditional insurance pattern. Now, insurance industry has been a little complex and had abstruse value propositions, and there's a lot of involvement of paperwork. There were paper based policies and things like that. So how do you see automation making this antiquated business model stand on its head? How do you see that bringing in an operational efficiency in the processes?
Yeah. So, firstly, we need to understand, as I said earlier, the whole insurance is the insurance. When I'm saying insurance, a life insurance, for example, is about ensuring an uncertain event. The uncertainty could be death, the uncertainty could be accident. Now, when you are ensuring an uncertain event, whose ability to convert into reality at a given period of time is not certain, is when you have to write a risk, isn't it? When I am
Correct.
promising to pay something, when I am not able to assess exactly when an event will happen, I have to rely that on various assessment of the risk, which is normally called as underwriting in an insurance world. Now, for these, the paperwork that used to be there were always either a financial document or a health related document or a family information related document, which was enabling to write the risk. What the old order and the way digital has helped changed is to bring about a seamless integration not only between the insurance company, the seller, and the buyer, but also a huge set of ecosystem of players, whether it be an Aadhaar or whether it be KYC for like PAN card verification or dedupe engine across an industry level, variety of these things at a real time, which was earlier not possible, enabling one, a sharper assessment of risk with minimal information, two, seeking this information without being too much intrusive into the life of the customer, having to make him subject to submitting 100 things. So while the form is being filled up, an Aadhaar gets authenticated at the back end. While the form is being filled up, a PAN gets authenticated at the back end, or a medical history is given, that is using an AI you could see whether his answers are in line with what the previous question and what the next question is, and being able to correlate. Now what happens is this has taken away a huge amount of if I can use the word, a selected suspicion that you start with, am I writing the right risk? That's taken off with the certainty. This is what the single most uh, benefit the digital disruption or digital transformation has brought about in this industry to move and make it leapfrog from a large paper, multiple document environment to today. Many of the companies claiming we are 90% paperless, we are 95% paperless, or some of them even claiming 100% paperless. That's the journey what digital transformation makes it possible. Again, once again, I would like to reiterate the important aspect here is not to take away the essence of what was being done, is to take away the troubles and the obstruction using the entire digital ecosystem of fintech, insurtech, and the third party players to be able to complete the core of insurance underwriting without having to create additional load on anyone in the system.
Correct. All right. So reducing the grunt work and making processes and methods more efficient is what
Yes,
it's aimed at. Uh,
indeed.
so, so Mr. Iyengar, you have been at the front end of all digital initiatives at Reliance Nippon Life Insurance. How did you deconstruct your business model and reimagine your business processes, redefine your customer value propositions for the digital age?
The first and most important thing when we embarked on some of these initiatives is we looked at all the key focus area. And when I say key focus area, we relooked at the whole process end to end from a seller, employee, and a customer perspective. Two very important points here. When people try to, the most common mistake that people do in a digital transformation is look at one small gap and try to bring in automation and assume that the problem is solved. It is indeed solved for that gap, but an end to end is necessarily not solved.
Right.
Second, many of these digital transformation focuses on customer. Yes, we do understand, we hear words like customer is king, etc. But we have to understand that this is like a triangle where there are three ends, customer being at the apex, and the two other ends of the triangle being the seller and the employee. And when I say employee, is everybody else within the organization who brings it together. Now, it is important to address the end-to-end process looking at all the three angles. This is what we did for our key process. Then, after we did that, what we did to ensure was create a digital map of this whole journey. Now, when you say digital map, you would find two things that emerges out of it. What is the area that you have a traditional gap which needs to be bridged? Second, what is the area that you need to relook at the way that it is being done? Probably it is not needed now. I will give you a small example. If your process step included that when a financial document is uploaded, an ITR is uploaded, there will be an underwriter who has to check it. Now maybe you automated the step of the ITR being uploaded. But when you look at it as a digital journey with all the OCR, ICR technologies, I could as well read the values from an ITR without the need for a human intervention, feed that value into my underwriting engine, which can then tell me the declared income, is it sufficient to be met by the premium. Now, when you digitally reimagine the whole thing, you see that the sum total of individual gaps that you fill in versus when you do it entirely, the entire one is what gives you the true transformation. The third stage is important for everyone to understand is that when you do this, you have just created the strong foundation. Like they say, if you want to build a 100-story tall tower, you have to go 6 stories down to create a basement from the ground, right? It's something like that. When you do this, you will realize that the ecosystem of various applications that you develop, whether it be a mobile app, whether it be a tab-based app, whether it be a URL or portals, by whichever name that you call. I love to use the word called empowering tools. When you try to create the set of empowering tools, they actually rely for that information on the single bottom layer of the strong foundation that you built in, which is the end-to-end process, and your entire back-end engine is ready to satisfy the needs of the front-end tool. This is a third step in the journey, which is extremely critical. More often than not, this is one area where many of the people commit a mistake. People look at a great fancy UX IX and say this is a fantastic app. You click on the app, it looks at your face and allows you a login. Great. And after that, what you need to do, you have to enter 40 pieces of information, and then you will get a
Correct.
message that we will get back to you shortly.
Right.
Now, is that what you intended in the tool? The customer was happy to look at the face and login. A user ID less login, right? But did it solve the problem? No.
No.
So you need that integration. So the layer of foundation, the layer of the UX, which I love to call string of pearls. So imagine the string of pearls is a set of the application systems and tools and apps, and the thread that connects are the interfaces that connects it with the backend. When you have that, you have not only a robust solution, you have a scalable and sustainable solution. And that is what we did. So when we did our sales application, we did that, which enabled us to today get more than 95% of our policy login coming from there. We created a robust CRM both as a front end and a back end engine, which enabled us to say that any interaction made by any customer from any source, whether it be portal, whether it be through an app, whether it be through a walk-in in a branch or a call center, you get a single view of the customer. So this is so very critical for any person who embarks on a journey. So in short, first rework the entire end-to-end, reimagine it. Second, understand what is the digital solution or a solution to manage it end to end.
Right.
Use the combination of an AI, ML, engines, as well as your standard workflow or systems which can integratedly work. Then the layer that goes to the entire world is an app layer or a portal layer or a call center communication layer, which will enable you to be able to satisfy the end-to-end journey in, as you rightly said, in a frictionless manner.
Correct. Correct. So that looks like a very comprehensive end-to-end strategy to weave digital in the entire fabric of your organization.
So let me
Now,
give you one example at the cost of taking a few minutes.
no, that's
People
okay.
generally look at, and some of the viewers might be wondering, everybody gives a new business example. What happens after that? Because a life insurance contract is a long term, claims is a critical piece of the
Correct.
whole settlement. So when we reimagined our whole claims process, we had claims automation. We had a good amount of claims automation. When we reimagined, we found out now, what happens if somebody wants to directly send some information through a branch? How my CRM is integrated to a claim system? From a claim system, how is my investigator engine integrated? So you would like to investigate certain claims. Based on certain types of claims, can I seamlessly immediately give it to an investigator? As if he gets a mail in his mailbox saying that you have a new case to investigate. Traditionally, nobody had thought about it. People thought about sending a mail or calling an investigator and asking him to investigate. So when we did this ecosystem, so today, investigator gets to know what to be investigated through a rule engine. He
Right.
completes the investigation and just uploads the whole report, including artifacts, where I have it back with me on a real time basis with all the trail records tomorrow for any discussion or any analysis. So these are also the thing when you look at, and I just thought I should bring this up because
Right.
traditionally, we all love to jump first into a new business acquisition example. But that's what we did across new
And
business
what is the
service.
kind of benefit that you're seeing? How has it improved your claim settlement ratio? What are the-
For example, it has drastically improved our fraud detection. So for example, we have algos which tells us based on the parameters entered and the type of the policy, the type of background, etc. Should this case be referred to risk investigation? What is the level of seriousness in that? Second, it has helped to cut down a lot of turnaround time between the time we used to give it to an investigator, the investigator does, and if he has a query, he will generally, they may not write a mail, they may call you, and when they call you, you may not be available. Now, all of that interaction is to a medium. Now, what has happened is it has looked at our overall end to end timeline. It's actually crunched by more than half
Okay.
without compromising a bit on quality, without compromising a bit on our risk assessment ability, as well as the need to be able to settle the money to the claimant, which has reduced by half.
Okay. Now, Mr. Iyengar, digital-led creative disruption can help break the physical and geographical boundaries and help an organization become digital. It can also reduce the time to execute transactions on offers and even services. It can help an insurer run an agile operational unit. So, what are some of the ways you think it has reduced the cost of operations and expansion for a company like Reliance Nippon Life Insurance?
As you very rightly said, the first thing digital has done, it has broken the geographical or physical barriers. My branch is not necessarily a branch made up of four walls. My branch is suddenly the mobile in front of me or a laptop in front of me, where I can use to interact anytime, anywhere, and in the pace at which I choose. Now, this is the core essence of the subsequent things. Now, what has it led? It has led organization to explore new geographies, new revenue models, new sales model. Now, what has that led to? That has led to increased revenue and the cost. And like in any of the cost of operation, a large part of the cost of operations is fixed operation. The higher the transaction, the higher the volume, the per unit cost subsequently comes down. So that was one way the cost of operations came down. The second is automating the whole operational area, like the examples of what I mentioned to you on claims or policy servicing, or servicing through a fingertip using your portals, apps. Now, this enables a self service model. What it means is, without having to depend on any of my resources, you can independently get your transaction, or let me call it, get your service request addressed immediately without any difficulty. This further brings down the cost of operations. Third, and most important, which I have found and I have been able to demonstrate in various organizations, various forums, is when you capture data at source using digital, what do? You ensure that everything that you were earlier capturing from a physical form is now 100% available as a data, which was not the case earlier. So traditionally, if you used to capture 70 pieces of information, you would probably capture only 40 pieces. Now, what's happened is I am allowing a data creation where every piece of data is available on a digital form. Now, this has suddenly opened up a huge data mine for me to be able to mine that and get some more insights. For example, if I have got a medical questionnaire, a classic example would be in underwriting. You would ask, "How has been your, have you, do you have earlier policies from any other insurance company?" Or a common question would be, "Is there an early death in your family? How is your parents' health, your spouse's health?" These used to be typically looked at only at the time of underwriting and seldom used afterwards.
Correct.
Now, with whole thing being on digital, this is available as a data point. Now, if I have captured an information which says my father is 55 and is healthy, potentially it also opens me an opportunity for a cross sell to try and sell an annuity policy to his family. Now, what is used as an underwriting risk also becomes an enabler for a cross sell opportunity with no additional cost, and without having to disturb the customer to say, "I want more information from you." And this is what I see as the single biggest, or one of the biggest factor that a data repository can give and is giving, which in turn reduces your overall cost of operations. These are the three stages in which the whole cost of operations comes down. Of course, you have traditional way of saying, if you send it on a soft copy, you don't need to send it on a physical, etc., etc. I'm not dwelling into that. That's like taking coal to Newcastle. It's known to everybody. These are the dimensions where uh, organizations are working. Some of them have been successful, and it would be good to see everybody being largely successful, because that's what is the real value of digital into play.
Correct, correct. So, Mr. Iyengar, you alluded to this point in your response, and historically, insurance companies have been sitting on huge amounts of data since there are periodic interactions with the customers at different stages of the policy. So, how do you see insurers leveraging customer data to create new revenue streams for their business now? How is digital helping you bring that sort of a creative disruption?
Indeed, you are right, Sneha, when you mentioned on sitting on pile of information. I would say tons of information, and this was for a variety of reasons. Traditionally, not explored much. A true data warehouse came into this industry probably only 6 or 7 years after the whole private industry came up. What probably was there was a data mart sitting under the garb of, or a disguise of, data warehouse. When the real data warehouse and analytics started stepping in, and this is what many, or almost today, most of the insurance company levels of maturity, different levels of maturity, have been using that. How does it help? At first, the first quick kill I always say is cross sell. The second one, which later on went, is upsell. Now, if I know your medical history, if I know your profile, if I know your premium paying pattern, if I know whether you're a businessman or a salaried employee, people started getting into offering pre-underwritten insurance product, which is also sometimes called as guaranteed insurance of a policy. You pay the money and you just say yes to this question. There are only 3 or 4 questions. We will issue your policy. This is another big advantage that came using data warehouse and using the digital layer. When AI and ML started further maturing, I'm talking about the journey from 2015-16 onwards, where AI ML started getting implemented or really used. Uh, and I would like to add only one point before people jump into pre 2015 or post 2015. Uh, an if then analysis is not an AI engine. An AI engine is far, far superior than that,
Correct.
where it can make its own subjective decisions and it learns itself, right? That's a fundamental difference between any underwriting engine or a standard engine versus an AI or an ML solution. Now, what happened is when this started coming in, the analytics and inferences became more sharper. For example, from the data warehouse, you could also see that if a particular agent has exhibited certain characteristics like there are a slightly higher percentage of death claim from his portfolio, I can use it as an alert to check his remaining portfolio. It opens up. We have to understand that revenue generation is one aspect of it. Revenue protection is equally important, and many a
Correct.
times revenue protection becomes very important. If I'm able to identify a potential fraud, for some reason I may not have detected at the time of issuance of a policy, but I'm able to do it using these tools in the journey, maybe in the next 6 months, 5 months, I'm able to get an alert and I'm able to analyze, I can weed out. I'm also protecting revenue or revenue leakage or revenue loss,
Leakage.
whichever term that we might want to use. So revenue generation is one side of the, like to call as a financial background person, one side of the balance sheet. Revenue leakage to be stopped is another side of the balance sheet. And that's what digital, and when I say digital here in this context, is very specifically the various automation plus AI plus ML enable these improvements or these leapfrog to happen within the industry. And trust me, we are just scratching the surface. We have not yet gone into the area of uh, speech to behavioral analytics. Any call that comes into call center, there are solutions available. The technology is there. How can you convert speech into alerts, which are behavioral alerts, and then can tell the person to say that your response has to be in this way? Now, some of them have started trying to use around it. Uh, that industry itself is very nascent. There's a lot of development that's happening, and some of the developments are real excellent developments that are happening. And that's the area where I see will enable. Uh, in the good old days, in the paper world, people used to talk about tickle feed. Uh, trickle feed, a trickle feed is nothing but every time a customer calls you, you get some information.
Correct.
And at that moment, when the call gets completed, it's all lost. Now you have, using these tools, you can not only get that trickle information and be able to tell what to do with that trickle information and how long is that expiry date of that trickle feed information. Because we need to remember that every piece of information comes with an expiry date. If you don't use the information before the expiry date, the
Correct.
information is as useless as a
Same.
paper in a newspaper basket.
Correct. Correct. That's the whole essence of the digital age, and everything has to be real time. So going forward, how do you see AI and ML tools helping create sustainable and unique revenue generating models in the industry? What is the pattern that you're seeing, the trends that you're
Uh,
seeing?
One of the biggest area where people are seeing, people are implementing it, and some of the successes are seen, though early days, is using real-time AI ML to be able to offer instant product gratification. When I say instant product gratification, when I'm speaking to a customer, and the behavioral input that tells me is that the customer is a happy customer with me, and he's in a certain life stage now, which is different from the life stage when he bought a policy, I can be able to identify and tell the customer and propose a new product for him. Now, all I need to remember as a call center executive or a seller is what product to say to him. The rest all is done by AI. It identifies the the tickle feed information. It identifies the customer satisfaction rate. It identifies what, therefore, based on the life stage, is my data that I need to mine, what product he has bought, and therefore what is the product that I can upsell to him. All
Correct.
that it takes is, like, if I'm a call center executive, I might enter only two pieces of information. That's it, without losing the focus and attention of speaking to the customer. And this is one big area where I see AI driving a lot around on that. Second is on the area of service. The biggest factor is on customer retention. Many of the customers do sometimes, under the influence of a seller or a friend, could take some sudden decision. In the world where we live and decide everything by a Google or a social media app, sometimes the flip side is someone would say, better invest the money here.
Right.
And if a person calls you up, he's not fully convinced on surrender, but he calls you up to get the information. Using an AI, if I can identify the a few key points as he speaks, it can prompt back to the caller, or in this case, the call center person or a branch official or the seller, to say, highlight these points, so that it reinforces the product that he has bought. And thereby, the customer is convinced, maybe I heard wrong. What these guys are telling me is right. I should continue with my policy.
Right.
So I see this as one big area, for example, on claims service. Of course, the other area is on claims. When an interaction comes up, it enables the AI, not just enables to detect a fraud. On a positive side, it also says, if you take a decision on a borderline case between a repudiation of a claim to a payment of a claim, if I take a decision to pay the claim, what is the extra risk that I'm carrying? And am I taking the right decision? The inputs that come from the AI and ML tool go a long way for a claims assessor to take that final decision faster, more accurate.
Right. Now, Mr. Iyengar, in the BFSI industry, blockchain is being viewed like a great solution that is looking for problems to solve. And organizations want to throw problems at it and see what sticks. Can blockchain herald a creative disruption in the insurance industry? What are some of the areas in life insurance, non life insurance, and health insurance where you think it could have a definitive impact?
A very valid point, and this is the topic of the need of the hour. You would see that blockchain is in most circle the buzzword, probably next
Correct.
only to AI, ML, and RPA.
Right,
This is
right.
the next buzzword.
Correct.
Blockchain has huge promises. Blockchain. So the biggest example that everybody knows, probably anyone who knows money knows that cryptocurrency's backbone is blockchain, right?
Correct.
So it is as prevalent and as famous as possible. Having said that, it's important for us to peel this onion to find out what is applicable where. Like they say, one shirt size doesn't fit all. Same, a blockchain in its concept may not be the answer everywhere, or can be an answer everywhere, but degrees vary. Now, coming to an insurance industry, the way and blockchain, first let us talk about the business nature of business, or the diversity of the types of product and the lines of business. You have three main arms: the life, the non-life. Some people call it general insurance. Maybe in India it's called general insurance. In the Western world it is called PNC, and so on. So the non-life, and the third is health insurance. And again, in this case, some of the countries, some of the geographies, health insurance becomes also a part of the non-life. But these are, from an Indian context, there are three
Three
clear
broad pillars.
pillars. Yeah. Now, in a life insurance industry, you would find that primarily a life insurance is a long-term contract. So people don't buy a policy for 1 year, 2 years, and 3 years. People buy a policy for 10 years, 15 years, 20 years, or for life. So that means the level of collaboration, the periodicity of collaboration drastically reduces, or is available or applicable at one or two or three critical touch points. For example, at a new business stage for risk underwriting, I might like to know if somebody has applied for a policy in my company, has he applied for a policy in some other insurance company, and which is not disclosed to me. A blockchain is a great example to
So
be
fraud
able to.
detection at the stage of customer onboarding.
Indeed, that is one. The second one is the second milestone or a touch point would be like, for example, a person has applied for a surrender of a policy at your place, and you find out that there is also a new policy bought from some other company. It will give you a different type of an alert. An alert would be that he is being potentially misled or being convinced that maybe the other company is better than this company. So you might want to clarify to the customer in a different way. It might also give, depending on the levels of collaboration, maturity, etc. The other company may also want to be red alerted to say that probably he is a shopper and who would stay with an insurance company for only 1 or 2 years. So, third area of collaboration when it comes to claims. When you get a claim and you find that this claim says a death certificate has got certain different attributes, let's say a date of death, and in some other insurance company a death certificate is given which is different or a reason is different, then you know what is to be done. There is also a fraud alert. There is also a risk alert. To us, beyond a particular point, a risk is necessarily not equal to fully fraud. A fraud risk is, it can be good or bad, but you have to identify. A fraud is something that you know that there is something very clearly suspicious in that area. Now, life insurance has these two or three to begin with, which is there. And as you discover more, you'll probably get more. Non-life insurance, on the other hand, the spectrum is huge from probably insuring a motorcycle or a cycle and all the
And
way
also,
to
it's a
you insure.
short-term product as well.
Indeed, it's a short-term product. You would have 1, 2, 3, 4 years. Not definitely not as much as a life insurance policy by
Correct.
any yard. The second one is by when you say it's a short term, it automatically means that I tend to renew my policy by. So the opportunities for checking are more. Similarly, many of these are also cross-border policies. For example, an export-import insurance, a cargo marine insurance, or international risk-related insurance.
Correct.
Now,
So
when
it
you
can
would find that
transcend
you would have to,
geopolitical borders as well.
exactly, it transcends geopolitical border where you will have to collaborate with different institutions, different entities, different individuals, and bring together the terms and condition on real time so that you can cut down on your time. The best example on blockchain on non-life, which has been proven, is on the cargo insurance, where many a times the joke used to be that by the time the cargo lands in the destination is where the insurance policy gets issued. Now, using blockchain, this just is a matter of hours. Even before the ship leaves the port, the insurance is there. Now, so there is a huge, because the industries are quite a lot in non-life.
Correct.
Third comes is a health insurance, which falls in between a life and a non-life, where you would have a four-way collaboration between a third-party administrator, the TPA, the insurance company, the insured, and the hospitals, and to do it in such a way whether they're the primary driver would be to say, how can I seamlessly settle claims? You don't want a person who is there in the hospital to be waiting for so long just to figure out whether this claim is being accepted or what is the situation. This is where this collaboration. So blockchain, in my view, the short answer, great opportunity. The greatness is not uniform. Depending on the component of life, non-life, and health, the depth of applicability will change. However, we all have to understand whatever I said is also probably just half of what the blockchain is capable. Every few months we are discovering newer innovation within the blockchain, newer interaction that blockchain is able to collaborate with various other ecosystems. Now the blockchain itself is getting enriched, which means that multiple use cases may soon start becoming reality. Right? So this is how my view on a blockchain would be, rather
And
than
when we
jumping for one
right.
answer saying it's great or it's bad.
Correct, correct. Now, at the ground level, what do you see in terms of awareness or the state of adoption of blockchain among Indian insurers? How high is the learning curve? Where do you see, how do you see them adopting? Do you see that interest level and it's not really, translating into adoption? What is the kind of trend that you are seeing?
So it's a bit of a mixed bag, to be candid. So, for example, there are already a couple of examples within the non-life industry where uh, you can call it as a sample project or a pilot project on certain lines of business have been done by a small set of like the non-life insurers coming together and using blockchain to work on. So, the answer is there is a high level of interest. Now, the high level of interest translating into actual projects and doing again depends on these three industries. Now, within the life insurance industry, we have been also discussing with multiple insurers as a consortium of insurers. All the insurers had come together and had been exploring options on blockchain. There has been some progress on that area, though it is pretty slow. Uh, However, I see an emergence of speed in this area, especially with now the angle of insurtech and fintech also being available into this whole ecosystem. So the way I see is it is not just the insurance companies coming together and doing a blockchain. If I can add a few insurtechs who can whose platform I can use to make my services available to my customer, or I can use certain fintechs to make it possible. It's not that I necessarily have to collaborate only with a set of insurers.
Correct.
Now you see that the pie is becoming bigger. The, so there is an interest. General insurance industry or the non-life industry has taken as progress much faster, as I would say, compared to a life industry on the blockchain. Uh, there are also discussions within the health insurance industry on that space, uh, and the levels of progress, to be frank, are different amongst the three of them.
Right. Now, Mr. Iyengar, insurtechs are heralding a very different kind of creative disruption in the insurance industry. They are bringing in new business models, ensuring, carving new niches, and ensuring the underinsured in a very different way. So, how do you see insurers collaborating with insurtechs to foster greater creative disruption in this space?
So there is already a lot of collaboration that happens at different level in tech, whether it be for platform for uh, uh, payment solutions or risk assessment solutions, or collaborating to understand the financial worthiness of a person by touch basing upon, let's say, his other surrogates. So there is already certain level of collaboration that happens. However, I see a very dramatic growth of the insurtechs in this space in the coming years, to the likes that we have not seen. You would have seen there are certain companies that have emerged out in the Western world, in especially in North America and some parts of
Lemonade,
Europe.
Lemonade, for
Yeah,
example,
yeah. So
Metro
Lemonade
Mile,
is there. There is Metro Mile and NIP. There
Nip.
are quite a lot of people. InsurTech has become the insurance company. So I would call InsurTech insurance. I love to coin that word, InsurTech insurance, where InsurTech is not just into the collaboration level, they are into the driver's seat. And now what happens is the way that you offer a product, design a product, offer a product, and service a product is quite of a different scale than the way that we traditionally look at it. So, InsurTech, uh, I am very gung ho on this whole InsurTech space, especially as I see technology driving insurance. And it
Correct.
is therefore a natural extension to see insurtechs uh, being in the driver's seat, insurtech insurance being there, and changing the way the we look at insurance. There is also a good amount. There is also another model where leading insurance companies have collaborated with a startup, or uh, uh, doing hosting of startups and incubating them, where the solutions that have been delivered first gets used by the insurance company, and then there is a period after which that can be going out to the market, and insurtech can sell it out in the market. Or the insurtech then if it's so great success tool, the insurtech itself becomes a subsidiary of the insurance company. That's another dimension that we see of how this area is something that you would see some of the largest insurance companies globally are working on that. To me, that's another flavor of insurtech. Rather than just looking at insurtech traditionally as a separate standalone, the insure takes its dimensions from the third angle. So these are three varieties of insurtech that I see today. Maybe the first variety is the majority. Very soon, I would not be surprised if the second and third also takes a good share in the total.
Right. Um, at this stage, I'd like to take a question from one of our viewers. He wants to know, while we've discussed this in AI and blockchain, but he wants to know what are some of the key priorities that and trends that insurance companies will see over the next 1 to 2 years.
The key priorities that the insurance companies will look at are: number one, how can I fully reach the newer geographies at a lower cost of reaching there, which would mean I need to have end-to-end digitization with the AI, ML, etc. that we spoke about, and automated intelligence being built in that can help me to reach bigger market. Second is a large, given the present COVID situation and scenario of have the more claims, etc., would be to a large amount of investment using on fraud, claims analytics, and better risk management, or strengthening certain areas of risk management is another area where I see a lot of focus and investments going in. Third is the area about how to strengthen or deepen the existing distribution channels, and so that the distribution channels each distribution channel can approach the customer in its unique way, whereby I love to call this terminology as n equal to 1, where each customer is different and you have to approach him differently, and the product proposition or service proposition itself will be different. How do we move to n equal to 1? This is what is a journey that is going to be sharpened. The way of traditionally sending out 100 people out and then trying to get the business will be there. I'm not saying it's very important. It's a backbone. It's almost all the companies, if not all, it's a backbone. This will be
Definitely.
largely also augmented by the second one that I mentioned to you, so that the revenue streams can be further opened up. Customer feels that this is a product that is tailor made for him, and this is a product or service that is well suited for me, and therefore I should buy it. These are the three areas that I see.
Right, right. Mr. Iyengar, in these last couple of minutes that we have with you, I'd like to understand from you that you've moved from an IT leadership role, from a CIO role to the COO role. And in these BFSI circle, it seems like a logical transition for successful CIOs to move to this new career trajectory. How do you see the COO role as a logical transition after the CIO role? And what did you do differently as a COO as opposed to a CIO?
Okay. And an interesting question. This is my personal journey, and the way I saw it, a CIO is better placed, if not best placed, to understand the business than any of his peers. He's
Correct.
actively involved in all the stages from strategy to implementation. He would be there in the strategy discussion
A
because
very
the
helicopter
strategy,
vision of his business
yeah,
as well that he has.
indeed. And that enables him to understand why something is being done rather than just doing it. While he is directly responsible for design, development, maintenance of the technology system, this helicopter view and looking at the overall view of the various components puts him in a natural sweet spot to be taking the role of a CO. In fact, I've always been of the opinion that and we spoke about InsurTech, we spoke about some of these examples. A CIO is also a best placed person for the role of a CEO. When InsurTech is insurance, technology runs insurance in many of these places. In the new gen insurance companies, the
Mhm.
technology is at the driver's seat.
Correct.
The TIO is all the more best placed to be
Mhm.
able to even play that role very effectively. And for me, some of the for me the I had always looked, and having worked in various positions, whether it is in operations, underwriting, claims, uh, apart from technology, also in digital and analytics. What it gave me was to understand the business more deeper, gave me a great opportunity. And that, when I was a CIO, enabled me to come up with solutions for the business that were very successful. And as I moved into the role of COO, the it enabled me to also look at both the business part of it with more focus, and apply the knowledge of technology, digitization, analytics, and look at a business problem as it comes to say that, hey, what can a technology do? What can a digitization do? What cores are the things that are there in the external world? What can I solve? And what is it that I need to look at from outside to be able to solve the problem? And I think that that has been my change in outlook, and that's what helped me to create more successful initiatives and successful stories uh, uh, on
Right.
all
And
the
what?
projects initiatives that I had taken. And learning is a journey, and and as long as you are glued to the problem and being able to understand it and apply your first principles. The most important thing that I always tell people is, irrespective of manual, automation, digitization, maybe tomorrow it's all robotics, first principles of any industry, first principles of anything will not change.
Correct.
These are the
Absolutely.
core. These are, for example, in an insurance, it's all about making the customer understand what are his needs, understand from him, empathy, being be able to be there with him. These are some things, just to, if I pick up from one area, these are first principles that never change. And as long as we keep this first principle and modify the subsequent components, whether it is from manual to automation, automation to advanced digital, digital to an AI, and AI to robotics and whatnot, that is what, if I started off this whole session with a statement on creative destruction, that's the completion of the journey of creative destruction. The one thing that remains constant is the first principles.
That's so true, sir. Thank you so much, Mr. Iyengar. It was an absolute delight talking to you, as it always is. You gave us a very detailed and comprehensive view of the way in which you're seeing the digital-led creative disruption in your organization, in your industry, and the trends that you're seeing around AI, ML, blockchain, automation, and how it's helping amp up the game for insurance companies. Thank you so much for spending time with us and sharing your
Thank you,
insights.
Sneha. Thank you, Sneha, to you and everybody in ETCIO. Uh, have a great day.
Thank you so much, sir. A big thank you to our viewers for tuning in today and sharing your questions with Mr. Iyengar. We'll be back next Thursday with another interesting session of ETCIO Leaders Live. Follow us on social media to find out who's our guest for the next week. Until next time, this is Sneha Jha signing off.